Welcome to RAD Academy. So on these tutorials, we are going to solve a past question from UCC on Foundation of Accounting 1. That is 2024-2025 first semester past question. And the topic is preparation of final account of sole proprietor. So we are going to take that question and we solve. So I'm going to read the question, then we move on. So I read, below is a trial balance extracted from the books of Ivana Enterprise as at 31st December 2024. The trial balance as at 31st December 2024 is, you have the debit and the credit side. That is bank 15,000, treasury bills is 25,000, carriage out was 1,000, general expenses 2,406, light and heat 2,768, rates and insurance 4,505, office expenses 2,755, postage expenses 565, office salaries 23,760, interest received is 7,500, bad debts 4,260, furniture is 4,500, premises is 38,000, inventory at 1st January 2024 is 14,500, drawings is 5,000, rent and expenses is 6,000, purchases is 85,726, return outwards is 805, sales is 195,870, trade receivables and trade payables is 10,620, 12,000 and 12,840 respectively. Warehouse wages is 11,500, bank loan is 20,000, you have discount allowed is 200, carriage inwards is 820, return inwards is 1,410, cash in hand is 2,480, machinery is 12,500, commission received is 12,850, capital is 82,665, discount received is 245, goodwill is 10,000, motor vehicles is 47,500, and then that is the trial balance and it's balancing. And additional information said inventory at 31st December 2024 amounted to 15,000. Required, I prepare a statement of profit or loss account for Ivana Enterprise for the year ended 31st December 2024. And I prepare a statement of financial position assets that date. Very simple question. Very, very simple question. So with the trial balance, one thing that you have to know is all the things that you are seeing on the debit side is either an asset or an expenses. Is either an asset or it's an expense. And what you see on the credit side is the capital, the liability, and income. That is one thing that you should know. The credit side is either is a liability. You should be able to differentiate that this is a liability. You should know that this is capital, and you should know that this is an income. So let's start with our solution. So when you have a question like this, the first thing that you have to do is always to write the name of the company or the enterprise. Don't forget that. So let's do that. So the name of the business is Ivana Enterprise. You underline it nicely. Then that is also correct. Or you can write trading profit and loss accounts for the year ended. So let's write statements, income statements for the year ended. we have 31st December 2023. So when it comes to the income statements for the year ended, or the income statement, there is a format for it. So what you have to do is you have to know the format. And this is basically, we want to know the net profit of the enterprise, just like sales minus your costs, and you get your profit. That is the same thing that we are going to apply here. So we have the format, so we are just going to follow the format. So anytime you have a question on this, the first thing that you should know is you always start with the sales. You always start with the sales. So when we look at the question, we have sales, and the sales amount is 195,870. So after this, you look through if you have return invoice. When you look into the question, you have return invoice. That's some of the goods that we sold was returned. It means we were not able to make profit on that. So it means if we were not able to make profit on that because it was returned back to the enterprise, then we have to less from the sales that we made to get the actual sales that we made. So we less, and the return invoice is 1410. So when we less, what we get is 19446. And this amount is our net sales. This amount is our net sales. So now we have our net sales. So the next thing that we do is to find our cost of sales. We have to find, this is our net sales. So we have to find the cost and less from what the sales. So we are going to find the cost of the sales, the cost that was incurred whilst we made that sale. So after getting that cost, we less from the sales to get our what? Our profit. So we come here and we say what? Less cost of sales. So what we are going to do now is we are going to calculate for our cost of sales. So we always start with the opening inventory. That is, before we started the business or before we begin that particular year, we already had inventory there. That is the inventory as at 1st January 2023. Yes. So sorry, so I think this is supposed to be 2024. Sorry. So the inventory as at 1st January 2024, that is our opening inventory. So that amount is 14. So we bring it to the second column, that is 14,500. Then we add what? Purchases. We add purchases. So this is just a format you just need to follow it. So we add purchases. When you look through the question, we have purchases to be 85,726. Then we add carriage inwards. That is, after making the purchases, the cost that was incurred in bringing the goods to the what? To the premises. That is the carriage inwards. We add it to the cost of the purchase. So that is 820. 820. So when we add this, we get 86,546. So after getting this, there was return outwards. Return outwards is after we brought the goods to our premises. We realized some of the goods were faulty, some of the goods were damaged. So we returned it back to the supplier. So if it was returned back to the supplier, then it means we have to less from our cost. So we come here, then we say less return outwards. So in the question, return outwards is 805. So when we less, we are going to get 85741. And this amount, 85741, is called net purchases. That is our net purchases. So mind you, it's not every question that you're going to find return outwards, you're going to find return inwards. Sometimes the question you just see opening, inventory, and purchases. You just add them to get your cost of goods available for sale. But then if you have carriage inwards, you have to add. If you have return outwards, you have to what? You have to less to get your net purchases. Then after getting your net purchases, you come and add it to your opening inventory. So when we add this to our opening inventory, we have 100,241. And this amount is what we call our cost of goods available for sale. So this is the cost of goods that were available for sale for that particular year. But then at the end of the year, we could not sell all these available goods. Some of the goods were left. As at the time we want to prepare our income statement, we have not sold all the goods that were available. So if those goods were not sold, then it means we cannot calculate profit on that. So if we can't calculate profit on that, then we have to less those goods that have not been sold. That is the closing inventory. That is where you find it. You find the closing inventory at the additional information. That is where you find your closing inventory. So our closing inventory, so we say less closing inventory. Closing inventory. And closing inventory in the question is what? 15,000. So when we less 15,000 from this, then we get 85,000, 85,200 and what? 41. So this is what we call cost of goods, cost of goods sold, cost of goods sold. But then when you look at the question, we have warehouse wages. One thing that you have to know is when it comes to preparation of final account of a sole proprietor, when we have wages only, when you have wages only, we treat it in the trading account. But then when it is wages and salaries, then we treat it in a P&L account as what? Operating expenses. But then when it is only wages, just like what you have in the question as warehouse wages, we add it to the cost of goods sold. So we say add warehouse wages. And warehouse wages in the question is 11,500. So I'm going to continue in the next page. So I'll continue from here. So let's continue from here. Let's bring our AC sign. So when we add our warehouse wages to our cost of goods sold, then now we have what? We have cost of what? Sales. So when you look at the previous one, we said less what? Cost of sales. So we are going to less the cost of sales, which is now 96,000. 96,741 from the net sales. So when we less from the net sales, we will get 97,700 and what? 19. And this amount is called our gross profits. This is what we say our what? Gross profits. So after getting your gross profits, You look through the question. If you have any other income, you do what? You add. If you have any other income, add. If there is no other income, you just move on to lesser expenses. So when you look through the question, you have other income. So we add them. What are some of the other income you have in the question? Some of them are what? We have commission received. When you look at the trial balance, you can see that the commission received is on the credit side, which tells you that it is an income. It tells you that it is an income. So commission received, we have 12,850. Then we have discounts received. Discounts received, which is 245. Then we have interest received, which is also 7,500. So when we add all the other income to the gross profit, we have 118,314. So we see that this is our total gross income. We see that this is our total gross income. Then now we say we should less our operating expenses. Less our operating expenses. So you look through the question, all the operating expenses in the question, you list them. We have bad debt, which is an expense. We have bad debt, which is, so you bring it down the second column, which is 4,200 and what, 60. Then we have rent. You have rent, which is 6,000. You have discounts allowed, which is 200. You have office salaries, which is 23,760. You have postage, which is 565. We have office expenses. So you list all the expenses that is in the question. You have to list all. Then you can now less from your income to get your actual net profit. So you have 2,755. Then we have rates, insurance, which is 4,505. Then we have light and heat, which is 2,766. 276.8. Let's continue at the next page. So please, I'm continuing here. Don't be confused. I hope you are following so you won't get confused. Thank you very much. Then we have light and heat. Then the next one, we come to general expenses. General expenses. So when you move to general expenses, we have 2,000. 2,106. Then we have carriage outwards. So carriage inwards is treated in a trading account, and carriage outwards is when you move the goods from your warehouse to the customer. That is carriage outwards. So that one is treated as an expenses because at that point the business is operating. So that one too is what 1,000. So when you are done, you add all your expenses, all this, the total that you get, you less from this total gross income. So that is what we are going to do. So when we add all the total expenses, we get 48,000. 48,219. Then we less from our total gross income to get 70,095. 70,095. So when we get the 70,095, that is our what? That is our net profit. That is our net profits. And this 48,219 is our total expenses. Very, very easy. So now we are done preparing our trading profit and loss account or statement of profit or loss account or the income statement. Now we have to move to the next II, which is we should prepare the statement of financial position as at that date. So that too is very, very simple. So this is how we prepare the statement of financial position. You should always, the statement of financial position is always prepared based on the accounting equation, which is assets is equal to capital plus what? Liability. You can decide to prepare it this way, or you can also decide to prepare it assets minus liabilities is equal to what? Capital. That is also correct. We have different ways of calculating, but then you have to make sure it's according to this equation, this accounting equation. So that is the statement of financial position. So let's prepare the statement of financial position and let's see how it goes. So let's go. So again, you start with the business name, Ivana Enterprise. Then you write statement of financial position, assets 31st December 2024. So here too, you bring your to see the sign. So luckily for this question, there is no adjustment, but then I'll find one question which has more adjustment and solve with you. So this question has no adjustment, there is no depreciation on road. So this question is very, very simple and straightforward. So we always start with your non-current assets. non-current assets. Non-current assets. So what are some of the non-current assets in the question? Some of the non-current assets in the question, we have premises. Premises, which is 38,000. Then we have furniture, which is 4,500. We have motor vehicles. So you just, for accounting, is very easy. You just copy the question and put it there and answer and just add them. That is accounting. So 47,000. I'm not doing anything difficult. I'm just copying what's in the question here. So when you finish, then you come here, you see machinery. We have machinery, which is also a non-current asset. Machinery is 12,500. Then the last one we see goodwill, which is also a non-current asset. It is an intangible asset. That is goodwill, intangible assets. It's also a non-current asset. So that amount is also 10,000. 10,000. So when we add all the non-current assets, we have 112,500. Then we come to our current assets. So with our current assets, we have the inventory. So the inventory, we pick the closing inventory because this statement of financial position you are preparing is as at 31st December. So anything that will come here should be the closing balance. That is what you should know. So if the inventory, we are picking the closing balance, and which is the 15,000. Then we have trade receivables. You should know that trade receivables is the same as debtors. Trade receivables. So that one is 10,620. Then we have treasury bill. It is a current asset. You should know that. Treasury bill, which is 25,000. Then we have bank, which is 15,000. Then we have cash in hand, which is 2,480. So we add the current assets. Then we have 68,000 and what's and 100. So this is our non-current assets, and this is our current asset. So now we move on to get our current liabilities. So what we are going to do is we will add all our current liabilities and less from this current assets to get our working capital. We can also decide to add this current asset to our non-current asset to get our total assets. Then we get our total liabilities. Then we also less it. So I'll do that method in a different question for you. So we will less the current liabilities from the current assets. So when we look through the question, let's move to the next page. So now we have our current liabilities. Let's write our current liabilities. So in the question, current liabilities is the trade payables, which is the same as creditors. So trade payables. So we are going to list our current liabilities. Our current liabilities, which is 12,840. We are going to less from our current asset, this 68,100. Yes, you can do it that way. We do that in order for us to get our what? Our working capital. We do that in order for us to get our working capital. So that is when we less from that, we get 55,260. So this amount is what we see working capital. So after getting this amount, we come and add the working capital to the non-current assets. We add it to the what? To the non-current assets. So let's add our working capital to the non-current assets for us to get 167,760. So after this, then we come and less non-current liabilities. And the long-term liabilities in the question is what? Bank. Please, bank in the question is different from bank loan. This one is loan. So that amount is also 20,000. So we less from this to get 147,760. So what I've done, the equation that I've done here is assets minus what? Liabilities. I got my assets and I lessed the current liabilities from it, and then I later lessed the non-current liabilities from it. So what I've done here is assets minus liabilities. So now I'm going to calculate my what? My capital, and it should be equal to what? To this. So when I get my final capital, it should be equal to this. Then it means it has balanced. So I'm done with assets minus liabilities. So now let's go to finance by. So with the finance by, you always start with the capital, the opening capital that has been given to you in the question. You'll find it in the question. So the capital in the question is 82,665. Then we add the net profit we had in the income statement. So the net profit we had was what? 70,000 and what? 95. We add to the capital. So 70,000 and 95. So when you add these two, you get 152,760. Then if there is drawings in the question, you less. If there is no drawings, then you are done. But then if there is drawings in the question, you have to come and less. The proprietor reduce some amount of money from the business, and that will affect the capital. So you come and less, which is what? 5,000. So when you less, you will get 147,760. So that is all. So this one is the. So when you get this, then that is all. So looking at what we've done, we've balanced the statement of financial position. If you're able to do this, you are done. So we have here 147, that is the assets minus liabilities, and we have here to 147,600, which is also the capital. That is all for this particular question. If you have any questions, any recommendation, put it in the comment section. I will attend to it. And also like and comment, share for your friends to also have a benefit of this channel. If today is your first time on the channel, kindly subscribe because there will be more tutorials in accounting which you are going to benefit a lot. So subscribe and click on your notification bell. Anytime a new video is uploaded, you'll be the first to be notified. Subscribe and let's make the channel great. Bye bye. See you in my next video.